excited to be here. My name is Meltem. I saw some of you yesterday in the session on the Bitcoin mining to AI HPC conversion. But today we're going to dive in. As per usual, I brought a lot of charts. We're going to go really fast. Don't worry about taking photos of the charts. I will be sharing all of them online shortly after the talk, and you will get an email from the conference with a full downloadable link to the slide pack. So you can have them, use them however you like, be my guest. So are you ready? All right, with that, we live in this beautiful place called planet Earth. And I always love starting with this photo. There's one fundamental truth to life on planet Earth and life in the universe as we know it. And that is the laws of thermodynamics, okay? And over the last 15 years with enterprise SaaS, tech investing, crypto investing, we have lived in an alternate reality where we believe we could bend the laws of physics, but we cannot. So in this talk, I'm going to focus on physics, crypto, computation, and why thermodynamics are essential to how we think about investing and building companies. And another reality we cannot escape: energy is the lifeblood of human civilization. There is no energy-poor, rich country. Every wealthy economy has mastered one thing, and that is access to and control of energy. And if we think about the US hegemony, it's been predicated on the fact that the US controls the petrodollar. The question going forward will be, who controls the electron economy as we shift away from hydrocarbon-intensive fuels to new alternative fuel sources, whether that's solar and renewables, nuclear, fission, who knows? So with that, I'm going to go ahead and invite up someone for a quick game. Does someone want to come play this game with me? It's very quick. Daniel Masters, as my former business partner, chairman of CoinShares, I'm going to invite you up here. Come on up. All right, so we have two charts. All right. So on this chart, this is 2024 market performance of 4 assets. Black line, S&P, returned 18% in 2024. All right, NVIDIA represents compute, Vistra, an IPP, an independent power producer, represents energy, and one of these is Bitcoin. Who do we think is what? Who's the green line?
Bitcoin.
Green line's Bitcoin?
Yeah.
Okay, orange line's who?
Orange line, NVIDIA.
NVIDIA?
Yeah.
Okay, blue line?
Vistra.
Energy. You are wrong. Narrative violation. The best returning asset in 2024 was energy, followed by compute, NVIDIA, and then Bitcoin with a measly 108%. Do you want to try again with 2025 data?
Sure.
Okay. He's an LP in my fund, by the way. You should know. All right, so here we go.
I shouldn't be doing this myself, obviously.
Black line S&P. We had a great performance of S&P last year, 24%. All right. Same 3 assets, NVIDIA, Vistra, Bitcoin, representing energy, compute, crypto. Who is the green line?
The green line is NVIDIA.
Okay, NVIDIA. Blue line?
Bitcoin.
Orange line?
Vistra.
Almost right. All right, NVIDIA, up 35%, S&P, 17%, Vistra, 8%, but had a great year of outperformance, Q2, Q3. Q4 was rough for the energy sector. Bitcoin, not the best asset, not the fastest horse in 25, ended the year down 10%. Thank you for playing. We're going to work on this. We're going to work on this. Okay, so hopefully this illustrated narrative violation. In this industry, we love talking about how incredible Bitcoin is and how everyone should be investing in crypto. But if you were allocated to crypto only the last 2 years, you missed out on incredible stock market gains. Okay, so let's talk about what's happening. The GDP growth of the entire US economy last year and this year has been mostly in data centers. The entire economy is data centers. The flow of capital around the world is being rewritten by data centers. NVIDIA in 2024 went from being a $1 trillion stock to this year being a $5 trillion stock. I believe by the end of the decade it will be a $10 trillion stock, which will be larger than the market cap of the entire S&P 500 in the year 2010. Think about that. We love talking about Bitcoin. The entire crypto market cap is only $3 trillion. There are 4 corporates who are larger than the market cap of the entire crypto economy. So we need to zoom out, and we need to think about capital allocation in a smarter way. And by the way, everybody who says it's a bubble, we're nowhere close to bubble yet. Nowhere close. It's just getting started, and the numbers are going to get insane. The biggest infrastructure build-out in modern history is happening right now. Let's look at all the physical infrastructure build spend over the last 100 years, okay? Public works as a percent of GDP, tiny. Manhattan Project, tiny. The US grid, tiny. Apollo project, we sent people to the moon, tiny. Interstate highway system, tiny. Broadband build out of the 2000s, everybody loves to talk about the ISP bubble, tiny. Tech CapEx last year alone was almost larger than all government spend on public infrastructure over the last 100 years combined together, and it's only growing. Are you convinced of the magnitude yet, or should I keep going? Okay. This is one big hot ball of money. So I talk about energy, compute, crypto. In 2025, the momentum plays weren't just the NVIDIAs, the Vistras, the Bitcoins. They were nuclear, neoclouds, and neobanks. If we look at the performance of some of these stocks, right, they ended the year at modest numbers. I think anyone here would be happy with being up 79 to 150%. I would be. But if we look at their performance throughout the year, we saw incredible outperformance. So what the crypto? Why am I talking about this? Why does this even matter? This is a crypto conference. It matters a lot. Our biggest victory as an industry is proof of work. Bitcoin is the blueprint for where the AI and data center industry is going. Bitcoin pioneered something essential, which is the energy to compute value chain and the creation of money that is rooted in the laws of physics, i.e. thermodynamics. Bitcoin is money that is created by thermodynamically scarce energy that is converted into computation that then creates a fungible global commodity, Bitcoin, that trades in 24/7, 365 markets with deep liquidity. This is profound, and it's civilization-scale, life-changing innovation. There are today 22 publicly listed Bitcoin miners with $64 billion in market cap. CoreWeave was the hottest IPO of last year, going public at $36 billion, started life as an Ethereum miner. Crucible won the first 2 Stargate facility contracts, which is the $800 billion data center build being supported by the US government. This is all crypto. All of these companies are crypto companies. This is the innovation we need to be focusing on. This is what it looks like, and it's beautiful. All right, so let's be really controversial. Really controversial. The AI boom would not be here today, would not be at this scale if we didn't have Bitcoin capitalizing billions of dollars of data center build out over the last decade, when CPU data center CapEx was relatively slow. Fueled by lowest cost electrification, Bitcoin miners own all of the low-cost power purchasing agreements around global economies, driving persistent demand for new hardware in the form of ASICs, which are really next-generation chips, pioneering this business model of behind-the-meter co-location, where you co-locate your data center with your energy, proving grid-scale demand response is possible. If we look at what happened in ERCOT, the Texas grid, during the snowstorms of 23 and 24, Bitcoin miners can turn capacity on and off, turn their power consumption on and off, and then they turned energy and compute into a fungible commodity. Rock beats scissors, proof of work beats proof of stake. Here's a chart nobody talks about. If we look at what happened to the price of the ETH to Bitcoin ratio, right? This is ETH to Bitcoin. Post the merge, it's been down only. Ethereum has never recovered in Bitcoin terms. Why? Proof of work is what matters. 2021 peak, let's talk about it. Ethereum had an insane peak moment in 21. Ethereum, when it was proof of work, was GPU mined. NVIDIA had its first bubble in 21. NVIDIA was supported by Ethereum's proof of work. The first big rally in NVIDIA happened because of Ethereum. What has happened since then? Ethereum has lagged, NVIDIA has grown. ETH is down 5% since that time. NVIDIA is up nearly 600%. Proof of work wins every time. And Bitcoin miners have the most valuable asset. First half of 25, Bitcoin miners traded as levered beta to Bitcoin. You see that. All of them trend together, right? Beta of roughly 1. Oh shit moment in the middle of the year. All of these hyperscalers can't get power. Who do they contract with? Who has long-term low-cost power agreements in place? Bitcoin miners. Look at that. All of the Bitcoin miners got re-rated. Look at the returns. Bitcoin miners that converted, traditional neocloud Nebius, converted neocloud, traditional data center businesses. Bitcoin, proof of work. So why am I here? Why am I talking about this? My job at Crucible is to be the best compounder of capital. How do I do that? I have to pick the right opportunity. I have to allocate capital to these opportunities, reinvest, compound, manage risk, and then minimize my costs and tax. I'm going to talk to you about how we do that using proof of work. So let's talk about what's actually happening here and why this is a generational investment opportunity. I want you to make money. That's why we're all here. If you're not allocating to the energy, compute, crypto value chain, you are going to miss out on the best returns of the decade. I've given this talk for the last 3 years. It's time for us to do better, to do more in this space. This isn't a physics lecture, but the modern economy is going to consume compute. Compute consumes energy, so we need to find, fund, and build markets for energy and compute on chain. And the future is about atoms and energy. We cannot escape physics. Never. It's never been possible. Maybe we'll find alternate realities. TBD. So I have a simple framework. How we invest in industrial infrastructure is 4 steps. We have to aggregate physical infrastructure resources, orchestrate them, optimize them, and then we financialize them. And what we do along that value chain is we do hella crazy financial engineering with equity, debt, and tokens. That's what crypto is really good at, is next-level financial engineering using exotic new instruments like perpetual swaps and other fun, unique on-chain instruments. Deepen. Don't say the word deepen to me. Deepen's a disaster. Why? The value of deepen hardware is very low. Low-value hardware allows, basically, for low proof of work. It generates low-fidelity, low-quality data. No market for it. You need GPUs. You need high CapEx infrastructure generating high-signal, high-fidelity information. So step 1, aggregate physical infrastructure. 00 is doing this. They built a private fiber network with a token incentive, which allows 15 different contributors to produce 3.29 trillion bytes per second of network capacity. Global capacity, by the way, on public internet is 1.8 thousand. So it's growing very quickly. Orchestrate the infrastructure. So orchestration is really about taking hardware fleets, whether that's energy systems, energy storage, compute systems, and making them programmable, making them compatible with computers. We need to make physical infrastructure readable by computers and programmable by computers. So we do this through orchestration. We're investors in a company called Nirvana Labs that has built a bare metal cloud that basically brings compute, storage, networking, and nodes accessible through one interface, allowing developers to write and deploy code very quickly and driving down costs of data egress and other computation by co-locating hardware and owning the physical and networking layer. Very cool. So displacing traditional cloud companies. Sidebar, we invest a lot in infrastructure as code for AI. So infrastructure as code is basically the practice of making the physical world programmable via APIs. So we're going to turn everything into tokens, data tokens, right? Whether that's physical infrastructure or whether that's information. We're going to have money tokens, which are crypto, and then we're going to have AI tokens, right, which are the output of running AIs. So we're investors in 3 companies here. One is building a CUDA compiler that allows you to run CUDA on any type of hardware architecture, whether it's a GPU, LPU, TPU. We have a stealth mode company that's containerizing AI workloads, so think Docker for AI workloads. And then the third company, Alchemy, allows you to natively push provision resources in TypeScript, which is a very simple programming language, very popular. And it basically does away with the need for infrastructure wrappers. So I think this sector is one that in crypto we would call interoperability, right? So it's basically the interoperability layer that sits between the chip and the application stack. And when I think about what I do, it's I invest in everything that sits between chip and application, which is where the compounding leverage and returns to capital are. Then we optimize. This is a cool company I invested in December. We're the only investor. What it does is it orchestrates and optimizes batteries, industrial battery systems. Industrial batteries are growing at an insane growth rate, particularly with more hyperscalers needing to do behind-the-meter generation and storage. But basically what it does is it allows battery owners to trade their entire portfolio at sub-second level across single grids or multiple grids. So it's basically a massive battery data system that also allows dispatch balancing, but allows you to trade in real time. So it brings together all 4 of the steps in our investment framework that I talked about. And then lastly, we're going to financialize it. We're financializing compute at Crucible. We invested in a company called Orn, first investors there. They've created compute and memory futures. So I can trade SRAM, and I can trade GPUs. We've also worked with them to create residual value puts on end-of-life value of our GPUs. And then we trade these products on something called Ostium. It's a perp dex that did 30 billion in volume last year. I traded 10x levered gold on Ostium. Great trade. And you can create perpetual swaps based on anything. So think about trading compute perpetual swaps, memory perpetual swaps, fiber perpetual swaps. Just yesterday, I was talking to someone about creating a swap for payload cost of sending payloads into outer space. Anything we can think of, we can financialize, list, and trade on-chain. We need to stop creating shitty vaporware tokens that do nothing and start thinking about how we bring real atoms and electrons that represent fundamental value creation in the physical world that we live in on-chain. That is how crypto wins, not with vaporware, but with real innovation in meat space. That's how we win. Crucible, what we're doing is we're building compounding loops. So we start with aggregation. In February, we'll be launching our own neocloud called Crucible Compute. We'll be one of the first domestic onshore US deployments of the B300 architecture from NVIDIA. We developed, financed, and operated this GPU cluster ourselves using capital we sourced on chain from USDAI. They're our partners in this. And we rack the GPUs at a dedicated colo, a data center we work with that obviously was a former Bitcoin miner that specializes in liquid cooling. Then we orchestrate. We invested in an orchestration company that embeds sensors into our rack architecture to gather real-time data on our GPUs so that we can monitor and ensure our residual GPU value. We also embed our infrastructure as code tools to make workloads portable and flexible. We then optimize. We've sold the majority of our compute in long-dated offtake contracts. We're selling spot in a variety of different markets, but we're further optimizing by doing compute to equity swaps, which allows us to turn depreciation tax dollars into qualified small business stock dollars. Very exciting if you're a US taxpayer. And then lastly, as I mentioned, we're creating new financial products and markets to help us price and transfer our risk in these new markets we're building. Futures and compute perps, buyer credit default swaps. So I want a CDS to guarantee me against bankruptcy from the buyers of compute, which are AI lab startups. And then residual value insurance products, really interesting, creating on-chain insurance pools to take first loss, et cetera. We are going to do financial engineering on steroids, on-chain, not for vaporware tokens, not for looping yield, but for the infrastructure economy that is getting built to the tune of $1 trillion a year, just in CapEx, and many trillions more in OpEx to come. And data centers are just the beginning. There are no roads where we're going. In the last 6 months, we've invested in rare earths, critical metals, nuclear fuel, solar panels for space. We just invested in a company that does chemical computation. There are no limits to how far we can go. If we can virtualize it and represent it as a token, if we can make this physical infrastructure compatible with computers, we can trade it on chain. Everything is markets. Energy, compute, crypto, this is how we win. And I will be here every year saying the same thing over and over again until you're all thermodynamics killed. In 2010, the US top 10 largest companies in the US were worth $2 trillion. I worked at ExxonMobil at the time, an energy company. Industrials, energy, and banking dominated markets. 2025, $21 trillion of market value in the top 10 companies, so massive multiple expansion due to software, semiconductors, energy. How we win going forward, crypto. It's a $3.2 trillion market. It's not growing. It's shrinking. How do we fix that? By working with energy and compute to grow crypto's TAM. My job as general partner, how am I doing my report card? When I pick an opportunity, I chose energy, compute, crypto in 2024. It was the right choice. How do we allocate? We allocate across venture, our compute cluster, credit SPVs. We reinvest, we're going to deliver liquidity in 24 months, and we recycle our capital. We manage risk through duration matched portfolio, and we diversify across themes and business models. We do crypto and non-crypto, and the non-crypto companies in the next decade will probably be Onchain or use stablecoins. And then cost and tax minimization. We have really unique ways to do this that we've sorted out for US investors. And I'll just say one last thing. We do no fee SPVs and direct invest. Last year alone, I created $88 million of value for my LPs. So we're doing our job. When you talk to managers, when you talk to investors, when you think about allocating to the space, think carefully about what you're actually investing in and how it ties back to the opportunity ahead of us in the global economy as we look at this huge data center build out and what's coming. Space is coming, nuclear is coming. There are a lot of new domains that are being explored, and I think we would be doing crypto a misservice if we did not think about how to bring that activity on chain. Final thoughts. This is a great talk from 2005, Peter Thiel. What do we need to do to escape stagnation as a society, as a civilization? We need to dream bigger, risk more, believe in atoms, believe in miracles, both technological and divine, or we unravel. That's the end. Thanks for listening.